Hello friends, the topic of today's podcast is looking forward with optimism. After 4 years of rising markets under this new government, we had one bad year. As we get ready to face another election, a new government, new prospects, new policies, it's time for us to know what we should be doing with our own investments. Rarely under a regime have we had extended years of stock market optimism. So in that sense, the 4 years between 2013 and 2017 are reminiscent of the 3 years between 2006 and 2008. That should bring the scares in you because 2009 was a terrible year. In comparison, I think that 2018 has been rather soft, muted. The stock market has punished investors who are overpaid, but I don't really think the stock market has punished all investors. Investors in the mutual funds and the public investing spaces like PMS have had a rough year. But if you are just an index investor or somebody who is a defensive investor, it's not been all that bad. If you notice, technology and consumption stocks have done very well in this year. The next year will see a very different investment canvas. Performance is likely to come from the most unexpected parts of the stock market. If I told you in January that technology and consumption are going to be market leading, few of you would have accepted it. But that essentially is the current nature of our stock market. It takes different direction every year. Finding these new investments would mean that one shows extraordinary conviction to walk out of performing investments into areas of promise. Essentially, few of us have really demonstrated that conviction. Sample this. Some of you may actually be considering redeeming all your investments and going into some other asset class like real estate or contemplating doing a private investment and stuff like that. This essentially is a reflection of a lack of patience and conviction. That is what is going to be tested in 2019. You're going to have 5 months of high political activity, 2 months of government formation, and then again the rest of the year in economic policy making, which could be a change from the past. Now, are you really ready to show the patience and conviction in 2019 to participate in the market's progress, in the parts of the market which are likely to perform in 2019? To answer that question, you need to basically prepare yourself to show more conviction, to show more patience, and to choose diligently. If you're one of those who's not done too well in 2018, while you're actually expected to do very well at the beginning of the year, this is a time to see whether the decisions you took in 2018 will come back to deliver performance in 2019 or if fresh thinking is warranted. My sense is that those who are still betting on the recovery of the mid caps and the small caps may actually need to take a fresh look, try and identify parts of the market where they have no participation, which could benefit from potential growth in infrastructure, potential growth in the capital goods cycle, and a broad-based economic recovery. Most of us may not have portfolios which are oriented towards that. But even those of us who have spent this year orienting our portfolios towards that broad-based economic recovery in 2019 still are showing signs of impatience, we are not sure. The economic media is not helping us because they are hammering away at data of the past without looking at what reform will deliver in the future. Now, this is usually the curse of economic media. They always squeeze the data till it tells them or gives them the narrative they want to create. But that's not going to help investing in 2019, because the narrative that is going to evolve towards the second half of 2019 is a fresh narrative over which economic journalists know as much as you and I do. So they don't really know much more. So it's an even field, and it's only a question of who shows more patience and conviction and not who shows more knowledge, because the knowledge is essentially what has happened in the past and not really what is going to happen in the future. Another important thing that all of you should remember is that the newer systems of resolving issues like IBC and NCLT are really things without precedent. So all judgments which are hurried in evaluating these mechanisms will turn out to be wrong in the future, and as an investor you need to appreciate that others could be wrong, and you need to show a much higher conviction in the face of such adverse judgments. So this is going to be a very interesting phase, a phase of opportunity, a phase where you can take your investing to the next level, but it's not going to be easy. So in that sense, 2019 is a year of challenge and opportunity. Those with patience and conviction shall win. Thank you.